Hey, it's Jennifer Lawhon with your April real estate market update. Let's jump right in. First, we're going to start off with talking about the impact of rising mortgage rates on the housing market, because a lot of people tend to think, and I do think this is just it is logical to think this, that if mortgage rates are going up, then home prices are going to go down. Now, as you know, if you've been watching my videos, you know I love data. My master's degree was in statistical computing or data analysis, and I love to look to see historically what has gone on so that we can kind of answer that question. So first, let's talk about the mortgage rates. If you've been watching them, they've been steadily rising. You can kind of see in the beginning of this graph is December 30th, so at the end of 2021. You can see where the mortgage rates have been over the last few months, and then at the end of March, you can see where we've gotten up to 4.67%. Well, the deputy chief economist of Freddie Mac says that mortgage rates are likely to continue to move higher throughout the balance of 2022. Although the pace of rate increases is likely to moderate, much of the increase in rates in early 2022 is in anticipation of what will happen later this year, especially with Federal Reserve interest rate policy. Now let's look at some graphs. I'm going to kind of share this graph and highlight different areas of the graph. If you look here, we're looking at some historical data. We start with October of 93. We kind of go through the late 90s, early 2000s, and then November of 2012. This is when we had mortgage rate hikes of more than 1%. So if you look back here at October of 1993, there was a mortgage interest rate of more than 2% increase. Now that's not what we're looking at right now. We're actually not projecting of more than 2%, but you can see that we still had an increase of 3% with home sale prices. And if you look down here, let's say at November of 2012, the mortgage rate increased by just a little over 1%, but there was an increase of 11% in home prices. So you can see here that even with the mortgage rate increase, home prices still went up. They still increased. So just looking at some historical data. Same chart, but now let's look at some other things. We're adding on now home sales. So notice what happened. Home prices went up, mortgage rates went up, but home sales went down. However, we're not going to look at the one up here in 93 that had a mortgage increase rate up by more than 2%, because that's not what we're projecting for this year. So we want to look at maybe something similar to November, where we had just over 1% increase. So you can see home sales went down by negative 2%. Not too bad. Now let's look at this. So we're just going to look at a little bit with another part of the chart. So we had an increase, right? We talked about this, of 2.38%. The final rate that year was 9.2%. That's quite a big change from what we're seeing now. And so of course we're going to see the home sales decrease. Now let's keep going. So if you keep looking now, let's look at the years where we're just looking at what we're projecting now, which is just over 1% increase. So let's just focus on those months. So we took out the one from 93 and a couple years where we went well over the 1%. You can see that home sales fell. You had negative 2%. This was positive, actually, they rose, and then negative 2%. So just a slight decrease. Now, obviously, you can see this one and you're thinking, wait, but that one had negative 14%. Those were those years. Remember the years, 2005, 2006, where we had that housing bubble. But remember, the housing bubble, that was not caused by supply and demand, which is what we're seeing now. That was caused by, again, we talked about poor lending practices, home price appreciations. There were a lot of faulty things going on during those years. So if you look here at months of inventory, so during these years, so we're still looking at the same chart, just adding some other things. These were the number of months that houses were held on inventory. So you had like 5 months, 4.5 months, 4.8 months. And so here's what the director of forecasting for NAR, which is the National Association for Realtors, says. While higher short-term interest rates will push up mortgage rates, I expect some of this impact to be mitigated eventually through lower inflation. Thus, I expect the 30-year fixed mortgage rate to continue to rise, although we aren't likely to see the big jumps that occurred over the past few weeks. So in a way, that's good news. We're trying not to look at They're not forecasting a huge jump. Freddie Mac says, history suggests that when rates rise, there is an initial bump in home prices as many move quickly to buy a home before rates increase further. But after that period, home prices slow. Freddie Mac analysis shows that a 1% increase in mortgage rates results in home price appreciation that is 4% lower. For instance, a 1% increase in mortgage rates would change home price growth from 11% to 7%. And the deputy chief economist, Freddie Mac, says, with rates rising expected to rise through 2023, it makes sense to obtain a purchase or refinance mortgage if you are in good standing. Now, let's talk about the spring housing market update, because we are now in spring. Yay! Hopefully your weather's looking better, although if you're up north, I know my parents who live up in Pennsylvania had to drive through a very bad snowstorm recently. All right, so Alto's research says that we keep watching for it, but there are absolutely no signs of a market slowdown anywhere in the data. If anything, we're seeing the market continue to heat up. So let's look at our maps. I'm going to show you the 2 maps in a row this time. This is your buyer traffic. Buyer traffic this spring has actually picked up. If you noticed in the winter, it's started to slow down a little bit. But buyer traffic is back. We have a lot of buyer demand across all 50 states. But the seller traffic map, now it is still better. If you remember a few months ago, most states were in the very weak. At least we moved up to the weak for a lot of these states. And then we have some starting to hit the stable, which is good, but we still do not have a strong seller traffic. So what happens when we have strong buyer traffic and weak seller traffic? We have a very competitive market. And that is what we are seeing now. Again, economics, supply and demand. So here's the active listings. They've increased for the first time in 6 months, so that's actually kind of good news. And we talked about that last month, that we were forecasting that we're going to eventually start to see some more listings on the market. So we have a higher 1 and 3 in March, which is good. And if we go to, well, let's look at this quote first. Now, more industry insiders are throwing out their previous forecasts and replacing them with more bullish short-term outlooks. So indeed, some experts say the 2022 spring housing market might go down as one of the most competitive on record. And this is the editorial director from Fortune. So here are some showings. This is showing time, showing you what showings have been, people that have been showing houses. And it's actually exceeding the pre-pandemic numbers. So if you look here starting in 2018 and 2019 were what we called our typical real estate years. Then we have our pandemic, right? 2020, 2021, but we've actually increased in showings already for this year. That is good news. How about price appreciation? Well, it's still accelerating, but not as fast as it was. If you compare January of 2021 to January of 2022, you can see a huge increase. But if we're just looking month to month, it's not a huge appreciation. So in other words, we saw a big acceleration at the first half of 2021, but it's slowing down. But yet, it's not depreciating, right? We're just slowing down, decelerating, we'll call it. Okay, here's another quote by Craig Lazara. Last fall, we observed that home prices, although continuing to rise quite sharply, had begun to decelerate. Even that modest deceleration was on pause in January. The 19.2% year-over-year change for January was the 4th largest reading in 35 years of history. So basically a summary of the graph that you just saw on the previous screen, not spring. All right, I'm in that spring mode. Home price forecast for 2022. Wow, I mean, it's kind of all over if you depend on who you're looking at. CoreLogic has the highest forecast, which is 9.6%, but then we have Zelman, who has the lowest price forecast of 3%. Average all of those forecasts and you get 6.7%. Still looking at appreciation. What about home sales? Average days on the market, not much has changed, 18 days. So that means when a house is on the market, it's usually on there for about 18 days and then we're pending. Existing home sales. All right, US overall, down. We're down by negative 2.5%. Look at the Northeast. They're at the lowest, almost 12% negative for existing home sales. South, look at that, we're picking up down here. We're the only ones in the positive right now. Come to Florida. All right, existing home sales. We've got 2020 in the gray, the light blue or medium blue, whatever you want to call that, is 2021, and then we've got the dark blue in 2020. Now, we only have data for the first 2 months. That's about all we can get at the moment. But if you look, you've got existing home sales are actually a little bit down nationally. Now, you're going to see in Orlando what we're seeing specifically in our area in a few minutes. New home sales, always doing good. We've talked about that. But you can look here that new home sales, they really had a big jump last year in 2021 because of such low inventory. People were jumping then to new home sales. We even have clients that we've helped find new home construction in our area because that's just what is more readily available for our clients. But you can see they've had a little bit of a decrease compared to a year ago. Total home sales, now this is everybody. This is resale, new homes, and you can see again, we've had a little bit of a decrease nationally from last year. Anxious to see what's going to happen this spring. Now, another question we get a lot is, what about distressed property sales? Again, this is January of 2012. You had 35% of homes in a distressed sale, which means a foreclosure or a short sale. Now, look at that. January 22, we're looking at less than 1% of the sales were in distress. So honestly, the home market's looking good as far as we're not having a lot of distressed sales, which is always good. Home prices. Sales price of existing homes. Now, year over year, we're looking at overall, we're going to take the average. In the US, we see 15%. Where are we seeing the biggest? In the South, and I can say we've seen that down here, 18.1%. In fact, wait until you see the map of Orlando where you can see our home prices. They're not going down. Change in home prices. This is year over year, looking at 20 city composite. February, this is February of last year, was at 12%. You can see we had a big increase here in July, August. January still 19.1%. So positive changes, appreciation still. Year over year, just overall, if you look at February, so this is looking at February, the current is at 20%. The forecast is at 5%. So again, hoping to slow down the appreciation. But it's all about competition, supply and demand. What about mortgage rates? Here's our table. Here's our projections. They constantly change, but we're looking at in the third quarter of getting close to 4%, but then by next year, getting into the 4% and a little bit over. So it depends on what we're going to see. It depends on our economy. It depends on the feds. We're going to see what happens. Mortgage rates, you can kind of see this starts in 2018 all the way in the end, and it goes all the way through. This is all the way to March 3rd. You can see, if you remember, during the pandemic, we did see some historically low interest rates, and now you can see that they are going back up. And this in the orange is where we were just talking about the projections, getting close to 4%. And here's our favorite part. Here's the Orlando update. So now we're going to look at Orlando sales. Look at this. So Orlando sales, look at March. Not as high as last year. So we had less sales compared to last March, but still more sales than we saw in January and February. So the market is starting to move more here in Orlando. What about the average sale price? Well, it keeps going up. Look at this. I mean, compared to last year, even though we've seen less sales, the prices have gone up, which of course, like we said, the stronger the buyer market and weaker the seller's market, our prices are going to go up because of the demand, the very strong demand. We've got a very competitive market. So you can see here in March, look at that. The home prices went up even more. Each month, our home average sale price is increased. So we'll see what happens in the summer, which is usually our peak time. As always, our spring buyer and seller guides are available. You can just email us or go to our website at lawhonhomedepot.com and we can send you your free PDF. All right, any questions about the Orlando area, its real estate market, call us at the number or visit our website at lawhonhometeam.com. And if you're enjoying our videos, please like and subscribe to our channel. And I will see you next month with the real estate market update. See how quick I got you through this one?